SV Union High School and Junior College, Pune, Economics, Standard 12th. Presented by Dr. Inderjeet Kaur Ahluwalia. Chapter 9: Money Market and Capital Market in India. Part 4. Structure of money market in India. The money market in India is divided into two parts. It comprises of both the organized sector as well as the unorganized sector. The organized sector includes the Reserve Bank of India, that is RBI, commercial banks, cooperative banks, development financial institutions, and Discount and Finance House of India. The unorganized sector, on the other hand, comprises of indigenous bankers, moneylenders, and unregulated non-bank financial intermediaries. Organized sector. The organized sector of the money market consists of the Reserve Bank of India, that is RBI, commercial banks, cooperative banks, development financial institutions, and Discount and Finance House of India. In our last videos, we have already studied about the Reserve Bank of India and commercial banks of the organized sector of the money market in India. Today, through this video, let us now discuss the cooperative banks, development financial institutions, that is DFI, and Discount and Finance House of India, that is DFHI, of the organized sector of the money market in India. First, cooperative banks. Cooperative banks came into existence with the enactment of the Cooperative Credit Societies Act of 1904. Cooperative banks supplement the efforts of commercial banks by meeting the credit needs of the local population. It fulfills the banking needs of small and medium income groups. The cooperative credit sector comprises of cooperative credit institutions such as primary cooperative credit societies, district central cooperative banks, and state cooperative banks. This figure explains the structure of cooperative banks in India. It is a three-tier cooperative credit structure. At the lower level, we have the primary level, that is primary cooperative credit societies. Then we have at the district level, district central cooperative banks, and at the apex level, at the topmost level, at the state level, we have the state cooperative bank. This is the bank at the apex level. It is an apex bank. Thus, the cooperative credit structure is a three-tier structure. The next is development financial institutions, that is DFIs. Development financial institutions are agencies that provide medium and long-term financial assistance. They help in the development of industry, agriculture, and other key sectors. Industrial Finance Corporation of India, that is IFCI, was the first development financial institution to be established in 1948. Development financial institutions have diversified their operations with the advent of liberalization and globalization. They have set up subsidiaries to offer a wide range of new products and services such as commercial banking, consumer finance, broking, venture capital finance, infrastructural financing, e-commerce, etc. Thus, development financial institutions are in the process of converting themselves into universal banks. RBI has issued guidelines for development financial institutions to become commercial banks. For example, ICICI, that is Industrial Credit and Investment Corporation of India, has become a universal bank by a reverse merger with its subsidiary ICICI Bank. And the last part of the organized sector in the money market is Discount and Finance House of India, that is DFHI. The Discount and Finance House of India, DFHI, was set up in 1988 as a money market institution based on the recommendations of the Waghul Committee. It is jointly owned by the RBI, public sector banks, and financial institutions to impart liquidity to the money market instruments. Thus, these are the various constituents of the money market in India. Thus, to summarize, the various constituents of the organized sector of the money market in India are: first, RBI; second, commercial banks; third, cooperative banks; fourth, development financial institutions; and lastly, Discount and Finance House of India. Thank you.